Hello everyone, welcome to our discussion sessions on official mock exam issued by ACCA for Advanced Audit and Assurance Level Exam for December 2025 exam attempt. In our today's class, we will be looking at question number 3 of this exam paper. I hope you all have watched the previous two sessions in which I have discussed question number 1 and question number 2 already. In our today's class, we'll be doing in-depth analysis of this question and we'll be actually drafting the whole answer in this word processor document. So it will be a detailed session. It will give you an insight that how you have to deal with multiple topics together in your actual examination. And you will also be able to understand the drafting approach, that how exactly you have to draft a point, what are the marking guidelines and all of the important information. These past paper discussion sessions are really important in finalization phase of your exam preparation because they give you an insight about the time management, about dealing with multiple topics and all. And it has proven really successful in my teaching methodology, as in my 15 years of teaching, more than 70 of my students have secured nationwide positions in the examinations which I offer, like Advanced Audit, Advanced Taxation, and Strategic Business Leader exam. Okay, so if you also want further assistance, you can always connect with me on my WhatsApp number. So let's deep dive into this question. It's an important question, have a requirement relating to sustainability, which is a very important topic nowadays. And along with that, there is a requirement on due diligence review. So let's read this question. Your patience and concentration will be important. It will obviously be a detailed session because we'll be drafting the entire answer also. So it is 1st July 20X5. You are a manager in Merida and Company, a firm of chartered certified accountants, which offer a range of assurance and accountancy services. Your firm has been approached to provide assurance to Aerial Diagnostic Company. Aerial Company, a company which is not an audit client of your firm, on a potential acquisition. See, when you read this introduction, obviously you don't find a lot of value information. It's just an introduction that where we are working, the name of the firm and the client. Okay. The following exhibit available on the left hand side of the screen provide information relevant to the question. The three exhibits, which we'll be obviously covering in a lot of detail. A summary of the request from Zeus Palace, Aerial's CEO, then Aerial Company information, and the extract from the financial statement. The information should be used to answer the question within the response option provided, which is a word processor document. And obviously, we'll be using it in our today's class as we will draft the whole answer, like actually type the entire answer, so that you can understand that what is the length of each point which you have to develop. So let's look at exhibit 1 without wasting any time and go in detail of this question. I want you all to listen to me very carefully as we move forward. The management of Aerial Diagnostic has requested that a due diligence review be conducted on a potential acquisition. I hope you all remember this topic of due diligence, which is part of other assignment section of your course. You have just received a conversation with Zeus Palace, Aerial's CEO, who made the following comments. Aerial Company is a medical diagnostic provider specializing in imaging and pathology services. In the last few years, the market has changed significantly, with most healthcare providers and patients using online services. This has led to a reduction in profit, and we recognize that we need to diversify our range of services in order to survive. Okay, so this is the company, Aerial Company, to whose CEO we are talking. Basically, Aerial Company is planning to acquire another company. Okay. Our client is Aerial Company to whom we are talking, and it is planning to acquire another company for which we'll be doing due diligence. So first he's telling us about Aerial Company itself. So basically Aerial Company provides diagnosis services. Okay. But since nowadays we all use these things, like we go for online services. Okay. We don't go in person for diagnosis services and the imaging services. So as a result of this, we decided to offer a subscription based digital health platform to customer, which provide customers with access to our full range of diagnostic services online. On investigating how to set up the platform, we found that we lack sufficient knowledge and resources to develop it ourselves. and begin to look for another company which has the necessary skill. See, Ariel company has the expertise in diagnostics, but they are currently doing it on site, like through their clinics and all. But now they want to develop their digital platform. So what they found is that they don't have the IT expertise. They don't know how to develop the IT skills. Okay, like how to develop that platform. So what they did was that they started to look for another company which they can acquire and make it subsidiary. And through that company, they get their digital platform developed, which has the necessary skill with a view to acquiring the company. We have identified Hiesta Health as a potential acquisition, and we have approached the bank for a loan which will be used to finance the acquisition if it goes ahead. Ariel company has not previously acquired another company. We would like your firm to provide guidance regarding this acquisition. So basically, Ariel company providing diagnostic services, imaging services, pathology services on site. Now they want to go for a digital platform. They don't know how to make a digital platform. So they decided that why not acquire a company which has those expertise. So rather than hiring IT experts to make that platform, they are acquiring a complete company. Obviously, if you want to go for a long-term business, you need to have ongoing expertise. And instead of hiring the employees, they will make that company as their subsidiary. So this is their plan. But they don't know how to do the due diligence work about the acquisition. So that's why they have hired us. Okay. Now, please don't give an advice that why you are acquiring a company, hire some employees. No, they want to acquire. We are the due diligence provider. Okay. So now you have to work on that target company. Zeus Palace has sent you the following information about Hestia company. Hestia company was established 4 years ago by two university graduates, Tiana and Ella, who secured funds from a venture capital company, Apollo Ventures. So basically, our client, Ariel company, is acquiring another company, Hestia company. And we are being provided the information about that Hestia company, that how it has formed and from where it has got the funds. Okay, to set up the business, Tiana and Adam created a new type of digital health platform interface which has proven extremely popular and led to the company growing rapidly with a strong reputation. They continue to innovate and have won rewards for health technology innovation. Both have minority shareholding in Hastia company. So basically, it has just been 4 years since that company is established. Their one platform has become very successful, and that has led to the growth of the company. And the funds were secured through a venture capital company. Let's read about Hestia company, and then we'll look at the requirement that what the examiner expects from. Hestia company employs 50 people and operate from a premises owned by Apollo Ventures, for which a nominal rent of $5,000 is paid annually. See, basically now when we will acquire Hestia company, what will happen? Obviously, the venture capitalists need to be repaid. And when you talk about venture capitalists, they have their own targets. If the venture capitalists have the majority shares, because the founders have the minority shareholding now. So either the shareholding is held by venture capitalists or maybe by other shareholders. So we need to see that whether venture capitalists want to exit or not, because venture capitalists have certain capital growth targets. They invest in a company with a target that, okay, we'll keep the investment till this time. Once we achieve that capital growth target, we'll exit. So what are the plans of the venture capitalists? Whether they want to exit or not? Who owns the shares other than venture capitalists? What level of involvement venture capitalists want to keep in the company if they want to continue their shareholding? And once we purchase the shares from the venture capitalists, obviously they will ask Hestia company to move out from their premises, because they were supporting Hestia company because it was their company. They invested in it. But once they will sell off the shares, they will ask us to move out, or they will at least ask for the market rent. Currently, it's like $5,000, a nominal rent, a small amount. So obviously, market rent, when that impact will be put on, the profits will decline. The company uses few tangible assets other than computer equipment, fixtures, and fittings. The biggest expense is wages and salaries. And due to increased demand for health tech services, freelance specialists have been used in the last 6 months. So now it also need to be considered that currently the company is extremely dependent on TNI and Adam because they created that health platform. Other than that, they are using freelancers. And you know that you can't rely on freelancers. So these all matters need to be considered when we are advising our client Ariel company to purchase this company, Hestia company. Because Ariel company is not planning to take services from them. It is planning to acquire that company. Okay. And we are the expert advising them. According to the most recent audited financial statement, Hestia company has a bank balance of $500,000. The company has three revenue streams: developing and maintaining digital diagnostic systems for healthcare providers. Hestia company charges a one-off fees from the customer for initial development of diagnostic system and maintaining the system for a 2-year period. The amount of this fees depends on the size and complexity of the system and averages $10,000 per system. So basically, whatever $10,000 we are charging, that includes development and a 2-year maintenance contract. If you remember IFRS 15 revenue recognition, you need to break this $10,000 into two parts: development and maintenance. Okay, development portion revenue need to be recognized immediately, and the maintenance portion revenue has to be spread over the period of 2 years. You can't recognize $10,000 together in one go. The customer can then choose to pay another one-off fees, averaging $2,000 for Hestia company to provide maintenance for a further 5 years. So again, we need to think that, okay, what are their revenue recognition policies? Because otherwise, the profits will be overstated. Subscription-based analytic platform. Hestia company has also developed a subscription-based analytics platform on which it provides access to clinical research material and health data analytics for healthcare professionals. Customer can pay an annual fees of $250, which give them unlimited access to the platform. This accounts for 30% of the Hestia company total revenue. And then licensing of clinical and patient databases. The company has built up several patient and clinical databases which are licensed for a fees to research organization and pharma companies. This is the smallest revenue stream, accounting for approximately 20% of the total revenue. So they have databases of patient and clinics. Okay, so research organization and pharmaceutical companies are obviously interested in them to send them the marketing contacts or contact them to sell their things. Okay, so these are the services which Hestia company is providing. We are just reading the question for the first time. Okay, we will deep dive into the data as we move forward. Then we are provided with some extract of the data if you look at it carefully. Revenue from 20x2 to 20x3, then 20x4 and 20x5. Revenue has been increasing over the years, but if you look at it from 500 to 2150, it was almost, I would say, 400 times growth, 500 to 2000. Then 2000 to 3450, the revenue growth is slowing down. I'm not saying the revenue is declining. The growth rate is slowing down. And obviously from 3450 to 4268. Then if you look at the operating expenses, that how they are moving, operating profit, interest expense is constant. That means that the loans are constant. So we need to think about that also. Profit before income tax. Then in the income tax, okay, 140, 300 and 475 they paid, and then they have the profit or loss. So obviously on this financial data, we can make a good analytical analysis like growth rates and margins and all. Let's see that what he's asking from us. Okay, what he's asking from us, and then obviously we'll deep dive into the exhibits again. Part A. Okay, let's look at it. Firms like Merida and Company are increasingly being asked to provide assurance on sustainability, environmental, and governance information. The IAASB has issued an exposure draft of proposed international standard on sustainability assurance 5000. If you remember, we had a complete technical article on this and we have already covered it as part of our course. We have a complete lecture on this, which aims to provide a framework and general requirements for sustainability assurance engagement. The standard will apply to sustainability information framework prepared under multiple frameworks and is also profession agnostic. If you remember, ISA 5, International Standard on Sustainability 5000, when we studied it, we discussed the entire article. Basically, this standard is prepared in such a way that it can be used on multiple reporting frameworks. We try and understand. When we talk about environment and sustainability, there are a lot of reporting frameworks going on in the world. Like IASB, International Accounting Standard Board, has developed IFRS S1 and S2. European Union regulations are different. Okay. Then task force related to climate, they have also developed their guideline. So there are multiple reporting frameworks going on around the world. But what IAASB has done, International Auditing and Assurance Standard Board, has done, that they have developed such a standard for the auditors, for the assurance providers, which we call as International Standard on Sustainability Assurance 5000, that it can be applied on multiple frameworks. Like whatever reporting framework means that, okay, whatever a company has done in the entire year, listen to me carefully, whatever a company has done in the entire year in relation to environment, sustainability. So obviously they report it to the shareholders. They report it in their annual report. In the annual report, you include a report on sustainability. So for reporting, not for auditing, for reporting, they use IFRS S1 and S2. For reporting, they use European Union regulation. For reporting, they use climate related regulations. So the report which they make, now the auditor has to do the audit of those reports. Auditor has to do the audit, give assurance. So while giving assurance, the auditor uses International Standard on Sustainability Assurance 5000. This standard is developed in such a way that it can perform audit. It provides guideline for the reports which are prepared according to multiple frameworks. Like it gives such comprehensive guidelines to the auditor that, okay, you are auditing a report for sustainability, made under IFRS or made under European Union or made under UN guidelines, whatever the report has been made. While doing audit, you have to follow these approaches. This, I would say, ethical guidelines and quality guidelines. So that is why we say that International Standard on Sustainability Assurance 5000 can be applied on multiple frameworks. So this makes it easy for the auditor, because auditor knows that, okay, I have to follow this set of guidelines irrespective of whether I'm auditing the report as per IFRS S1, S2, report as per European Union, report as per UN guidelines, or whatever it is. So this standard is a comprehensive standard. And in the technical article section also, if you remember, this is the article and you can read it also. Okay. And we have already had a detailed discussion on this article. I had a 1 hour detailed class recorded on it. Okay. So this applies to sustainability information reported across sustainability topics and prepared under multiple frameworks. Now, what do you mean by multiple frameworks? IFRS S1 or S2? IFRS S1 or S2? Okay. Or if you talk about task force on climate related financial disclosure, or you talk about European Union guidelines. Okay. So it can cover all of them. It is such a comprehensive guide. Then another word which he referred is profession agnostic. Profession agnostic means that this standard is made in such a way that this standard can be used by accountants also and by non-accountants also. See, when you talk about sustainability information, so it's a big area. It includes your environmental emissions also, what carbon emissions you are doing, how you are harming the environment. It includes your social work also, like the diversity which you are ensuring in your organization. It includes air pollution, water pollution, or different form of impacts you are creating, or renewable energy which you are using, or the waste which you are creating, or how much water you are consuming. So there are a lot of areas where the audit involves accountants and non-accountants, experts of other fields also. So this assurance standard is made in such a way that it can be used by accountants and it can be used by non-accountants also. This is called as profession agnostic. It is not restricted to accountancy profession. It gives general guidelines also which can be used by waste disposal expert also, that whether the waste recycling claims made by the management in their report are correct or not. So obviously for waste recycling, I will not hire a chartered accountant. I will hire an expert of that waste disposal management. Or for carbon emission, I will not hire a professional accountant. I will hire someone who is environment expert. Okay, like what is the carbon emission? Similarly, for diversity or for sustainability in different aspects, you will not hire a professional accountant. So what happened is that while giving assurance on these matters, we need people from different background also. So this assurance standard is made in such a way that it can be used by non-accountants also. This is what we call as profession agnostic. Discuss the significance of exposure draft 5000 being applicable to information prepared under multiple sustainability reporting framework and the importance of it being profession agnostic. 5. So it's a general requirement from this technical article. So many students ask me that, sir, is it necessary that we cover articles and watch your lectures on articles? Because I have attached almost like 20 lectures on technical articles. I've covered each and every article in my classes. So I always say that if I've included 20 lectures, I'm not mad. I know that how the examiner go about. And if you look at this requirement, it has nothing to do with the scenario. It is all about understanding the article and remembering the rules. No need of rote learning. If you've just watched my lecture, you could have easily done it. So first of all, significance. First of all, the significance of the exposure draft being developed to prepare to applicable to information prepared under multiple sustainability reporting framework. First, we have to talk on its significance. And then we have to talk about importance of it being profession agnostic. How many marks? 5 marks. Okay. Let's look at it and then we'll deep dive. So, the question is Merida and Company. Merida and Company, and this is the requirement. I want you all to listen to me very carefully. Okay, it's very important because see, it's a 5 marks requirement which you have to develop from the technical article. So, first of all, discuss the significance of exposure draft 5000 being applicable to information prepared under multiple sustainability reporting framework. So, sustainability reporting is done under multiple reporting frameworks at different jurisdictions follow different reporting frameworks. Just listen to me and then I will explain things again also. Different reporting frameworks for sustainability information. Okay, a company may have to report under multiple frameworks, or it may have a choice to follow any particular set. Okay, it includes IASB framework, IFRS S1 and S2, and European Union guidelines, European Union frameworks on sustainability, and task related task related to climate, task force related to task force for climate related financial disclosures. Okay, having a standard or a single set of assurance standard like exposure draft 5000 makes it easier for auditor to give assurance on these multiple frameworks. See, first of all, you highlighted that practically companies have to follow multiple frameworks. We have to talk on significance of exposure draft 5000. Okay, so sustainability reporting is done under multiple reporting frameworks as different jurisdictions follow different jurisdictions follow different reporting frameworks. Like maybe UK is following a different framework and different European countries have their own frameworks. A company may have to report under multiple reporting framework if it's a multinational company, or it may have a choice, uh, or it may have a choice to follow any particular set. Okay, like okay, you can select any one of them. So now being the assurance provider, it becomes difficult for you. It includes ISB framework, IFRS S1 and S2, which has become part of your SBR course also, by the way. European Union framework on sustainability and task force for climate related financial disclosure, having a single set of assurance standard like exposure draft 5000 make it easier to give assurance on these multiple frameworks. It also increases the confidence of investor. See, you have to talk about the significance of exposure draft 5000, which gives power to the assurance provider to use a single assurance guideline framework to all reporting frameworks. See, understand the thing. When the auditor is giving assurance on the report prepared, the auditor has to perform certain steps, like in planning, he has to consider these things, these procedures he has to perform. The report has to be prepared like this way. He has to follow these ethical guidelines. So while IAASB, International Auditing and Assurance Standard Board, was developing this exposure draft 5000, what they did was they made such a comprehensive standard which enabled the auditor to give assurance on the report which is prepared under any of the reporting framework. So it's a comprehensive thing. So it makes it easier for the auditor, and it also increases the confidence of investors, as now they can trust the assurance provider report under ED 5000, as they know that it will include standard service from assurance provider, irrespective of reporting framework used by company. Are you getting it? So how it is making it easier for the assurance provider and the audit. Now, importance of it being profession agnostic. Okay. Exposure draft 5000 is profession agnostic, which means it can be used by accountancy professionals and also by non-accountancy professionals. As far as non-accountancy professionals satisfy following two conditions. Now, what are those conditions? See, first of all, we will explain the meaning of profession agnostic. They follow the ethical guidelines, okay? Like they follow the same ethical guidelines as the accountancy professionals do. For example, if there is a professional who is not following integrity, objectivity, competence in due care, so obviously this assurance standard will not help his assurance. And secondly, they ensure the same level of quality in their work as the accountancy professional. See, this assurance standard tells us what we have to do in relation to auditing the sustainability report. It will not tell us that, okay, you have to be ethical in your work or you have to ensure the due care in your work. Like, okay, say, okay, you have to inspect this. Now, if the non-accountancy professional, like, okay, maybe an environmental expert, is not ensuring in due care while reviewing the work, so obviously the reliability of the report will decline. Okay. Same ethical guidelines, same, or I would say similar standard ethical guidelines are followed by professional as accountancy professionals do, and similar quality standards are followed while doing work as accountancy professionals do in their work. See, none of the thing I'm writing it on my own. In this standard, everything was explained. They adhere to relevant ethical requirement and apply a system of quality management which is at least as rigorous as those used by accountancy practitioners. Not necessary to copy the same words. You have to present the concept. They follow similar ethical guidelines and they follow the similar quality standards are followed while doing work as the accountancy professional. Okay. Benefit of exposure draft 5000 being profession agnostic is that a lot of assurance work on sustainability information involve non-accountancy professionals also. Non-accountancy professionals also, like just think about it. While doing audit of environment related information, I don't need a chartered accountant. Maybe I need non-accountancy professional like expert of environment, expert of social issues. Okay. This standard enables non-accountancy professionals also to perform assurance work which is same credible as, or I would say which holds similar credibility as accountancy professional work hold. Okay. So when you are doing these type of requirements, many students say that, sir, do we learn the articles by heart? The answer is no. You have to understand the concept and present it on your own. First of all, you have to talk about the significance of exposure draft 5000, which enabled audit work for reports made under multiple reporting framework. So you talked on that. It makes it easier for the auditor. It increases the confidence of the investor. Then you explain the meaning of profession agnostic and the two requirements, similar ethical standard guideline and similar quality standard guidelines. And then you discussed that the benefit of this is that sustainability work involve a lot of non-accountancy professional also. So their work also need to hold similar credibility. And that can be done under exposure draft 5000 because this standard is enabling them also to use this standard. So now those experts can also say that, okay, we have done the audit of this sustainability information and our audit work is as per exposure draft 5000 issued by IAASB. So that increases the credibility of the assurance which non-accountancy professionals are giving. I hope that you guys have understood. So the objective of our today's session and whatever we do is to give you a guideline, like what some students will see. So if I just copy and paste it from here to there, yes, that's also acceptable. But in the examination, you can't do rote learning. Like how many articles you will learn, how many books you will learn by heart. That's not practical. Okay. So this is the 5 marks answer which we developed. Now, coming to part B. Using the information in Exhibit 1 and 2, identify and explain the matters which you will focus in your due diligence review and recommend additional information which you will need to perform your work. How many marks? 15 marks. Again, a very easy requirement. Okay, very easy requirement. I want you all to listen to me carefully. Just a second. Now, let's look at it. Let's see what he's saying in it. Okay. So now we have to identify the matters which we should focus on the due diligence review. Like, okay, Ariel company is our client and they are going to acquire this Hestia company. So being the expert, like, okay, you are an expert advising a real company that, okay, you are acquiring this Hestia company, so you should think about this. These matters are really important. Like, okay, involvement of venture capitalist is a matter which need to be considered. Dependency on the founders is a matter which need to be considered. They are paying a nominal rent. This need to be considered. So what matters need to be considered? And then what additional information they should be thinking. Okay, so let's talk about it. Believe me, it's a very easy question. It's like just a 15 marks requirement. Believe me, it's very easy one. So let's start with it. The first matter which I believe that we should consider is involvement of venture capitalists. Okay, now involvement of venture capitalist in Hestia company, with Hestia, in involvement of venture capitalist in Hestia company need to be considered that whether they are planning to exit on acquisition made by Ariel company or not. Okay, what level of shareholding they hold, and whether their shareholding will also be acquired by Ariel company. Okay, whether their shareholding will be acquired or not, whether they will remain or exit. Because, okay, if they hold the majority shares and we want to take over Hestia company, so we'll buy their shares. Okay, if venture capitalist will still remain part of Hestia company shareholding, then their level of involvement and their expected exit clauses also need to be considered. See, matter to consider, okay, you are an expert and just think, your friend is Ariel company and they are going to acquire Hestia company. So they told you everything. So I think, okay, think about this. This is very important because venture capitalists are looking for a big capital gain. They have certain targets and normally they want their involvement in the board or all also. So what is their level of involvement? What are their exit clauses? You need to think about that. So this is the matter which you need to consider. And along with that, what additional information you expect? So write addition, like along with it, a matter and additional information, a matter and additional information. Okay, additional information relating to shareholding structure of Hestia company will be required to determine who holds controlling shares of Hestia company and whether shares of venture capital also need to be acquired. Because see, venture capitalists are not like normal shareholders who need money. They are rich guys, they have a lot of funds. They only exit when they achieve their capital gain target. Okay, when they are investing, they make a target that we'll exit when we get like 60-70% of the gain. Because they invested in the company when it was founded. They invested 4 years ago. Okay. Agreements of Hestia company with venture capitalists also need to be considered, that what level of involvement they can hold in company as per the agreement. Okay, whether they have defined rights of representation in board or not, because normally venture capitalists have such things. a matter to consider, and then additional information. Similarly, Tiana and Adam, who were the founders, developed the platform which became successful. So the company is apparently dependent on Tiana and Adam for success. So whether they will continue, and they have the minority shareholding, so they have the continuing interest with the company or not. Okay. So dependency of Hestia company, dependency of Hestia company on the two guys of Hestia company on Tiana and Adam. On Tiana and Adam need to be considered as they too, as they are the founders and real reason of Hestia company's success. Okay, their developed interfaces have become reason of organization success, and now they own minority shareholding. Okay, it need to be considered. It need to be considered that whether they will continue with the company after acquisition by aerial company, and how their interest will be aligned with the company. Okay, that's very important with the company. Like, just think about it. Someone planning to take over Mirchawala Institute. So whether these Mirchawala brothers will be continuing or not. Because okay, Mirchawala and then Mirchawala brothers like Owais, Mustafa, Subhan, our team member Emma Shabi. So whether we are continuing or not, that has a great impact on how the investors' investment will be impacted. Okay, so that's important thing which it's a matter to consider. Now, what additional information you can have? Okay, potential discussions and agreements which will be done with Tiana and Adam to determine their ongoing commitment with with Hestia company after acquisition by aerial company. Like, it's very much normal that some clause like, okay, you have to continue for next 5 years. And what their interest alignment will be like, okay, any mandatory tenure which they have to continue, clauses on mandatory tenure which they have to complete after acquisition, okay, and their pay packages during that period, because it's very important that how their interest will be aligned. Additionally, organization structure need to be considered, that how much Hestia company is involved in Tiana and Adam, how many interfaces were developed by other employees in the organization, and whether Hestia company can operate independently or not. All very important which need to be considered. Like, okay, in the similar way, it need to be considered what are the other papers which are taught by other than this Mirchawala brothers in Mirchawala accountancy. That tells you that how much the organization is independent. Because for the investor, for the acquirer, this is very important. Otherwise, just hire Tiana and Adam as your service provider, as your employee. Give them a big chunk of money and hire them as your employee, rather than acquiring a complete company. Because when you are acquiring a company, you need to think about the company's survival. Then we employ 50 people and we currently operate from the premises of Apollo Ventures. So what's the market rent? Okay, Hestia company currently operates from premises of its venture capitalist, and it is paying nominal rent for it after acquisition by aerial company this will not be the situation. This will not be the situation, as venture capitalists will demand market rent or will ask a Hestia company to move out to other location. This may impact profits of Hestia company, as nominal rent will be shifted to market rent. Okay, so market data about market rental of similar premises need to be considered as actualization of rent is important to arrive at actual profit of Hestia company. Okay, nominal rent is not the rent which will be payable after acquisition. Okay, or you can also see that possibility of moving to any other premises. Okay, it also need to be considered that whether Hestia company can operate from any other premises which are in a cheaper area, or it is necessary for it to operate in same vicinity where its current office is located. Why it need to be considered? Because that will impact the rent which you have to pay. Like, okay, maybe the venture capitalist has an office at a very affluent area. And maybe we don't need that affluent area anymore because we are just that developer type thing. Okay, so we can have a back office anywhere else also. So what matters you need to consider and what additional information you need. Like it was a 15 marks requirement. 1, 2, 3, 4, 5, 6, 7, 8, and 9 points are already done. Like I believe that it's just points are falling out. They use few tangible assets other than computer equipment, fixtures, and fittings. So, because their major assets are the intangible assets, which are internally generated, that's why they are not appearing in the account. So, what is the value of those intangible assets? Like the interface which they developed. Okay. Similarly, the databases which they hold. Okay. Hestia company has few tangible assets in its books, as its major assets are its internally generated intangible assets in terms of interfaces it developed and customer databases it holds. These internally generated intangible assets would not be appearing in its accounts as per IS, or I would say as per accounting standards. Their valuation need to be considered in order to determine rightful value of Hestia company. That's very important. Okay. Additional information. Like, see, it's not necessary that you always start with additional information. Agreements are also additional information. Organization structures are also additional information. Market data is also additional information. Additional information from market data need to be considered if any similar transactions have been done in past in which such intangible assets are traded or transacted to determine a value on them. Additionally, Internal valuation models can also be used based on the income they are generating. So we need to look at their value also. Because then, like, okay, when you're valuing a company, look at the value of their assets. In the assets, there are a few tangible assets only. So what about the intangible assets which they hold? Okay. Then they are using freelancers. See, that's a problem. Because freelancers shows that company is dependent on the people who are not full-time committed with us. Then the company holds a bank balance of $500,000 only. If you look at their financials, like they have very good profits, 470, 890, 1425. And their business is not of credit. They are just getting advance. Like they take $10,000 in advance, they take $2,000 in advance. The subscriptions are also advance. Okay, these data is also in advance. So why they are holding very less cash balance and they are not doing any capital investments also? So are they distributing a lot of dividends or what they are doing? See, these are the matters which you need to consider. Okay, now Hestia company is using freelancers for its IT related work. It needs to be considered as freelancers are not full-time committed with any organization and reliance on them for data cannot be placed also. Okay. Lack of full-time committed employees as part of hierarchy in relation to IT increases risk of investment as Hestia company is an IT expert company. Like just think about it. Using freelancers and becoming successful is a success by chance. It's not your own success. It's not done by your full-time employees and system. Okay. Additionally, Hestia company holds bank balance of $500,000 only. It also needs to be considered as company's business is not of dealing on credit. Sales are received in advance and business also do not involve any capital expenditure because you just have the running expenses. You make sale, you have running expenses against them and you get a profit. You're not purchasing any big offices or machinery or things like that. Do not involve any capital expenditure. Okay. Company must have big cash balances unless it is paying huge dividends. Okay. Additional information in relation to detailed cash flow forecast, cash flow data of previous years and forecasted periods need to be analyzed to understand movement of funds. Okay. So if you look at the data carefully, like how many points we have written? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and 14. And still a lot of question is remaining. These revenue streams are remaining. This entire financial data is remaining. A lot of data is remaining. Like I would say it's just an easiest requirement. And the entire paper was very easy. Like not a single point in this entire paper when well that okay, this may be difficult. Okay. Then if you look at their financial data, they get a one-off fees from the customer for initial development, and then this initial development and 2-year maintenance contract. Okay, so we need to understand their revenue recognition policy, like how they split the revenue, because the maintenance contract revenue has to be spread over 2 years, and the initial development can be recognized. Similarly, one-off piece of 2,000 for further 5 years, that also need to be spread. Okay, so revenue recognition policy recognition policy of Hestia company also need to be considered, as initial $10,000 or as initial amount they receive from customer has two portions in it, one for development of interface and other for 2 years maintenance. Okay, revenue portion in relation to development can be recognized when interface is handed over, whereas revenue for maintenance has to be spread over 2 years. Maybe they recognize the entire revenue together. Additionally, further revenue for 5-year maintenance also need to be spread over 5 years period. Early recognition of revenue will overstate financial performance, and it's very high risk that maybe they recognize revenue as they get the funds. See, my 15 marks are done. So for me, the question is over. But if you would have given me 30 marks on this question, I would have done that also. I can require additional information like, okay, give me the breakup of their revenues, which they have booked, so that I can see that how they are recording revenue. Additionally, you can take additional information like how they divide the revenue between the development and maintenance. Okay. Then for the subscription based model, they take annual fees of $250. So here also you can say that how many customers are recurring customers, because that show the sustainability of this revenue source. Because okay, one time the customer paid $250, got access a lot of information, then whether he is recurring or not. Okay. Similarly, for this databases which they hold, what are the legal and regulatory requirements in relation to databases, because they are selling these databases. Okay, so does the law allow that? Okay, then similarly in the financial information you can do a lot of ratio calculation. You know that every calculation you make, you get up to 0.5 mark. Like you can calculate growth in revenue, you can calculate changes in the profit margin, you can talk on interest expense, that how come interest is constant, and when the company is so cash rich, why it's not paying its loans. You can look at the calculation of the tax data. Okay, you can look at the average tax rate also. But our 15 marks are done. We read the information and said that okay, we need to think about venture capitalists, we need to think about dependency on the key employees, we need to think about freelancers, we need to think about the cash balance, we need to think about revenue recognition policy. What you need to think, and what additional info you need to know. That okay, I have to think about it. Show me the agreement. Show me what are your deals. How the founder will continue to work. A very easy requirement. Very easy. I would say it would be a blessing for the people who get such a requirement. And obviously, part A was also very easy if someone had covered this article. And for my students, there is no point that someone feels any difficulty, because we covered all of the articles in detail. So with this, our discussion sessions on this official mock exam for advanced audit and assurance level exam for December 25 exam is done. Okay. If you have any query, feel free to contact us directly on my WhatsApp. Okay. Thank you, everyone.